Hello and welcome. Today we're working on how to calculate gross profit margin. Now, gross profit margin is always a percentage. It's one of the profitability ratios. So gross profit margin is the percent, and here's the formula. You take the gross profit divided by net sales. Now, sometimes gross profit is called gross margin, but in this case, gross profit divided by your net sales. Let's look at the first three lines of this income statement for Delta Company. Our net sales are $40,000. Our cost of sales or cost of goods sold is $24,000, and our gross profit is $16,000. Now, we are given the $16,000, so we can just use that. But you might have a problem where it says, hey, the sales are $40,000 and the cost of goods sold is $24,000, or the cost of sales. And so you simply would take the $40,000 minus the $24,000 to get the $16,000. If you're given the $16,000, just plug it in. But if you're not given the $16,000, you have to be given the sales and the cost of sales. So $16,000 divided by the $40,000, and we come up with a percentage. So the percentage is going to be 16 divided by 40, and it's going to be right at 40%. So that is our gross profit margin. The first calculation of profitability is we want to make sure we have a gross profit margin. Typically, you want that to be at least 30%, so you can make a profit all the way down. If you don't make a gross profit, you can't make a net profit down here or a net income. All right, thanks for watching. Please subscribe. We'll see you on the next video.